Imagine running a business where profit isn't something you hope for at the end of the year, it's baked into every decision you make. This is the revolutionary concept behind Profit First, a cash management system that flips traditional financial thinking on its head. By prioritizing profit over expenses, entrepreneurs can create businesses that serve their lives, not the other way around. Part of this movement is Ron Saharyan. Did I say it right?
Yes, you did. Wow.
All
Thank
right.
you.
He's the co founder, managing partner of Profit First Professionals, 20 years of experience building, managing businesses, and he's made it his mission to eradicate entrepreneurial poverty. Today, he joins us to share his journey, insights, and the practical wisdom that has transformed countless businesses worldwide. So, Ron, you've dedicated your work to helping entrepreneurs prioritize profit, build businesses that truly support their lives.
Yeah.
Tell me about a pivotal moment or personal experience that inspired this mission for you to eradicate entrepreneurial poverty.
So yeah, no, thank you for the wonderful introduction as well.
My pleasure.
I got to record this, so I got to have it for everybody to read the end.
I'll send it over to you.
Yeah, no, thank you. I grew up the child of an entrepreneur. And I had ups and downs. There's been times where my father would come home and throw cash all over the place. And then there was, I remember times where, we were eating welfare cheese. And we could thank Ronnie Reagan back in the 80s for that. And the best thing about being able to, eat that cheese back then was you were able to make it thick. You were able to cut your name into the lot. You made it whatever you wanted. So I saw my father have the ups and the downs, but mostly downs. He was unemployed for quite some time, and I never wanted that to happen to me, to my family. So all I did was, pursue a career, pursue money, pursue opportunity so that my family would have to, experience entrepreneurial poverty. And so that was the driving force for me to just grind out, grind out, grind out. I didn't know that the mechanism, the vehicle was going to be Profit First Professionals. That didn't come till 2014. But throughout my life, I was always driven to excel, driven to help, driven so that people, not only me, but my friends and stuff like that, don't experience the same type of hardships that I once
Makes total sense, man.
did.
Well,
Yeah.
building a company, it's never easy. And I know you've been around the block a couple times. So just to kind of bring in that empathy so that our listeners know you've been there, what's one challenge from your own journey maybe that taught you a lesson that you still share with, entrepreneurs today?
Yeah. So the entrepreneurial struggle is a fallacy. Okay. I didn't realize that. I'm going to bust the doctrine of sacrifice. And I did do it. And so one of the beautiful things about Profit First is that it's not accounting, it's not bookkeeping. Imagine having a business every day where you woke up knowing that you have the right systems in place that allow you to focus on delivering your goods, allow you to focus on sales, allow you to focus on mentorship, allow you to focus on so many other things. And that's what the profit first methodology has allowed us to do, right? Because that's exactly what it is. It's a system that resides between historical documents, right? And call them financials, in forecasting, which are hopes and dreams. So every day, imagine getting up, not having to worry about how am I going to pay myself? How am I going to keep my expenses out of control? How am I going to be profitable? Right. And so that's one of the things that I want to stress today is that the world is not flat and you don't have to experience entrepreneurial poverty any longer. I mean, depending on where you are now, you might have to make some changes, but if you're a startup and you're ready to go, this is your fiscal foundation. This is your cash flow foundation. This is the ultimate pay yourself first methodology. So if you're sick and tired of wondering, how am I going to pay myself? How am I going to keep my expenses in control? What's Ron talking about being profitable? Give Rami a call. I got 10 Profit First books that I'm going to gift to Rami's organization that he can kindly mail out to you guys as well, too. It's that important that you have this system.
That's awesome, man. I appreciate that so much. I know a
Yeah.
lot of our listeners, they're in various stages of their entrepreneurial journey. We have
Yeah.
a lot of nonprofits, we have a lot of city government. And one
Yep.
of my questions is going to be if there's any overlap there. But I know that there's also a ton of businesses just getting started. They're just getting into this world of scale and growth. And I will, I'll give my personal testimony, which is that in 20, I started my company in '09. 7, 8 years in, something like 2017, 2018 is when I read Profit First. And when I really sat down and did the metrics, my profitability was 4.5%. Every
Right.
buck that came in, my wife and I working full time kept 4.5 cents. And I can distinctly remember picking up a giant client and just rocking out with the sales reps. Yeah, go guys. Yeah, yeah, yeah. And then going back to a conference room, and my wife and I just broke down. We just were both like, we have no idea how we're going to handle this because the profitability wasn't there. So the work would get done, but we were consistently at the end of the year, you look back on it, and we were making less than we were when we both worked in regular jobs for years.
Well, that can happen when you're working with government agencies and various different institutions that have a tendency to control your margins, your profitability, what you're billing, what you can earn under the guise of volume, if
That's
you
right.
will. You
Well,
know,
and yeah, and in my industry, back then anyway, we had very little differentiation on product or price. There's that first entrepreneurial stage to me, uh, where profit first definitely makes a huge difference. Is you have to you have to create a product or service that is unique and able to be valuable and allows you to derive value. If you're not able to have any margin, then that means that you as an entrepreneur probably aren't adding much to the equation, right? Margin
no,
is that reflection of the entrepreneurial add-on. That's your cut, right?
yeah,
And so to some degree, it's a philosophy of making sure that you're taking your cut. But on the other hand, you also have to kind of, if you're right there at the beginning and you have no price control, no product differentiation, no cultural impact, no leadership in your field, yeah, you're gonna have a tight margin, and you know, that's your fault. That's the job,
yeah.
man. That's the entrepreneur's job.
I'm chomping at the bit because what you're talking about is extremely important, and that is pricing, margins and pricing. That's what actually makes the company go wrong, right or wrong. A proper pricing margin is going to help you with your culture. And see, this is what's the beauty of profit first, right? It's not all about profit. Okay. Our formula is sales minus profit equal expenses, right? You sell, take the profit, manage your business on whatever else. But what people are neglecting to understand is that P is also representative of owner's pay, right? You got to pay yourself first. Two, profit. Yes, absolutely profit. Even if it's 3.5%, okay, it's profit, right? Then taxes, tax for the Uncle Sam, right? You got to give him the money that he wants. He wants his money. Then we also got mission, vision, and purpose, right? And also security, but also culture. We have to make sure that our pricing models, right? However, we get to that price needs to be, we need to be confident. The price we go with should be uncomfortable. We have to make sure that there's enough meat on the pricing bone for culture. That includes burnt muffins, spilt batter, and freebies, right? In addition to, how about half day Fridays all year round? How about birthday cards, birthday cakes? How about celebratory things?
I think you're hitting it on the head. This is some of the key pieces that I wanted to get into. I know, look, Profit First, I want you guys to read the book. I want you to check out Ron's various podcasts. I know a lot of our audience already knows it in and out. And in
Right.
fact, what I really want to focus in on, because I've got your brain on, is let me just say, if you don't know what Profit First is and you need a financial system, this is the one. When I did it, I was at 3.5. Now I have a healthy profit margin. It changed everything about my business and my life. The reason I
Yeah.
know Ron and Mike, the author of Profit First, because it changed my life. I wrote to the guy and said, dude, you changed my life. Right. And that's how we got to know each other. So can't recommend that enough. But on this podcast, a lot of our people, they feel a conflict when it comes to this. Employees don't see a company's profitability as a priority, as a good thing. They're focused on their own compensation, their growth, their
Yeah.
day-to-day experience.
Right.
So, how does the profit first system like account for this disconnect? What can business owners do to help employees feel invested in the company's financial success? Like, how do you just address that? Like if you're wearing a shirt that says
Yeah.
profit first,
Yeah.
right? And then the employee's like, I'd like a raise. You're like, no, profit first. That's not what I know that's not the right answer, but how do
Right.
we address this disconnect?
Right, because profit sometimes can be seen as a dirty word.
Right.
And profit is there's nothing wrong with profit. With profit, you pay down your debt. With profit, you celebrate the health of the company. With profit, you can be charitable. You know, you got to have a lot of profit if you're looking to have your name on the next medical building, right? You need profit if you want to sponsor the little league baseball team, soccer team. You need profit if you want to be able to give the kid who comes up your stairs all the way for candy for Halloween. You need profit because that's going to cost you money. All these cultural things are part of the culture of a business. And so, you know, one of the things that we've done here is we've offered profit distributions. Okay, we follow it by the law of the book in profit first. And so I'm going to share with your audience exactly what Mike and I do in our organization. Okay. So
Awesome.
we have a profit account. The only thing we can use that for is quarterly distributions for ourselves and the staff. We take a predetermined percentage of income and we move it into that profit account. Then every quarter, what we do is we take 50% of that profit out. 50%. That means we're leaving 50% in there. Okay. There's a strategy on that. I'll get to that. But with that that 50%, 20 of it percent goes to the staff. 30% of that goes to Mike and I. Mike and I split that 30% 50-50. The staff now has 20%, okay, that we divide by how many employees have been here for a year. Okay. So that's a way to constantly be giving profit. So as the company grows, so does the profit distributions of the employees. And the employees look forward to a quarterly profit distribution. That's more powerful than an annual bonus or profit distribution. And the fact that we leave 50% in it means every quarter, right? Whether the company goes up or down, there's still going to be a little bit of profit available in that account for our organization. It goes ups and downs, but this is a great way to get the staff involved, to keep an eye on expenses, get the eye on various little things, retention, right? Retention. And so what it is a holistic approach to it, because with profit, we can do all these other things, right? One of the issues that we see in any industry is attraction and retention,
That's the game.
right? So you've been working with us for X amount of years, probably 8, 9 years, maybe even longer than that. Our retention is probably second to none. We don't have people quitting our organization. We don't have an attraction problem either, right? Why? Because we give our not members, our employees another reason to get up in the morning other than a paycheck, right? It's not all about profit, but with profit, you can design the culture to attract. So what's an attraction? I don't know. How about 8 weeks paid vacation? We offer that. This is not going to be me bragging about my
Yeah,
work.
it's a pretty good brag though. Yeah, I'm only
Yeah,
getting a lot of can I apply there? Yeah. No, that's how it should be.
yeah, no, no. We offer half day Fridays all year round. We offer up to 8 weeks paid vacation. We have parties. We did profit distributions. We have book clubs. So everything that we're doing is employee first. Employee first is the mindset. Family first is the mindset. Profit is the way you create the environments to help you retain, attract, have fun, and deliver the systems and the processes in your work with a smile on face. It's that
Mhm.
simple.
I think that's exactly it. And another way to kind of recap a couple big pieces of that. Um, it's
Yeah, that
difficult
was
to
a lot.
enroll. Yeah, no, it's great, but it's difficult to enroll employees in a desire for the business owner to get a bigger boat, right?
Right.
Truth. On the other hand, you definitely want to work in a company that's making money hand over fist than one that is going down, right? You don't want to be on a sinking ship. So, especially at the executive and leadership level, uniting them and talking about why profitability is important that it allows you to invest better in your employees, that it allows you to provide perks and address cultural issues that sometimes just need a little money put in. Sometimes it often needs money spent well, right?
Yeah.
In terms of processes and systems and communications. But when it comes down to it, it costs things. And being profitable allows you to do those. If you go to a shop that's barely breaking even, they don't have the money to do that, and they can't be flexible with their employees' individual needs. What Ron's
No.
pointing out is a highly profitable company can be a significantly better employer.
Yeah. And it's not all about driving shareholder value.
Right. Well,
Driving employee value increases shareholder.
exactly right. Labor arbitrage, like this our labor leverage is the entrepreneurial journey, right?
Yeah.
It's having other people come in, learn your systems, learn your culture, learn your behaviors, and they execute, and you're making money on that margin, right? And if you can't, if you're not profitable, you're not going to be able to do this. So I want to dive specifically into that profit sharing program you described. So with
Mhm.
profit first, you're setting a profit margin at the beginning, right? Profit first.
Yeah.
So let's
We're,
say this
determin-
is
we're determining what our profit account is going to be funded by a percentage.
that's right.
Um, yeah.
So all right, hey, it's coming up on first quarter of 2025, new year, new percentage. You say 20% of every gross dollar that comes in the company, we're sticking into this profit first account. Something like that. I hope it's a much higher number. I'm sure it is a much higher number for you.
Well, no, it's
You don't need
not.
to share anything with me. I'm just saying there's some
It's,
percentage.
it's a percentage. Yep.
How often do you recalculate that?
We've recalculated a couple of times over the 10 years, probably less than five.
Okay,
Uh,
so it's not like every quarter you're going to sit down and go, "Oh, we're going to do." You're pretty stable.
No, because we don't we no because that's like the Griswold's Christmas, right? You're pulling your eyes over, the wool over your eyes, hoping for money, a bonus, and banking on it. And that's not profit is in a bonus is not should not be seen as income, should not be seen as salary. It is the benefit in the reward for a well-run business. Okay. And so if the business is run greater, the percentage of income will be more. Okay. For the profit. If it's less, it's less. But there comes a time where, it doesn't make sense. Okay. If we're all in this together. So if sales is, maybe dropping or maintaining and attrition, okay, might be happening going up, right? We're all working together to figure this thing out. But if our OpEx is not meeting expectations based upon our operating account, the expenses that we have already earmarked for investment, for initiatives, if for whatever reason that happens and we can't meet our already invested initiative, that means we're not running as healthy as company as we can be. And you can either cut expenses, okay, increase margin, reduce profit, right? We were at a point where the only thing we could do at that particular stage, since we're all in together, is drop a profit point here or there.
Yeah.
Okay. So we dropped a profit point. All right. We let the staff know, hey, listen, they know.
Right, they're seeing them walk. Yeah, yeah.
They're seeing, they can feel it, they understand. And so, profit's also a badge of honor. I mean, the company's called Profit First.
It's a little
Right?
easier, and yeah.
Yeah.
But
It's
so when you set that percentage, whatever
mm,
it is, and you kind of stick to it, sometimes you got to readjust it, but it's pretty rare.
yeah.
That money goes into an account. You take 50% of it and basically call it retained earnings, something like that.
Yeah.
Okay, set that aside.
Yeah. It is.
So
Yeah.
let's say it's 20%. Now you got 10%.
Mhm.
The owner's taking um, of that
Ah,
10%, half of it.
yep.
So now you're taking out five. That's your fun money. That's your profit. Happy days, right? And the
Actually, sorry, we're taking
70%.
yeah,
You're taking
30%.
70. No, you're taking 70. You're leaving 30 in there for the employees, right? Or is it the other way around?
No, so what we're doing is say our profit is 10%. That's what the account we allocate 10% in that. We take 5% of that out, 50% of that out. Okay, we leave 50% of it. Out of that, the month 50% comes out. 20%, Mike and I split 50-50.
Okay.
Okay. The 30% of that 50 goes to the staff.
Okay. So that's 30%. So again, in our 20% profit thing, we're talking about 3% is the
Yep.
employee profit share.
Yep.
Um,
And then what we do,
mhm,
because what we have is now 50% of whatever the percentage is, we're now able to use treasury management skills. We're now able to layer CDs. We're now able to make that money work for us while it's sitting there, right? It's also a nice umbrella. It's also 3 to 6 months of core capital available. It's
right.
also, we have at least, you know, uh, close to 9 months to a year of payroll already allocated. All that this is, and this is a nice safety net in case, I don't know, a pandemic happens.
Yeah. Yeah. Just in case. Not that that ever happened. Um, okay.
Right. But you also don't draw into it, Robbie. You also don't, if you're constantly pulling from Peter to pay Paul, which is taking from profit to cover OpEx, to cover owner's pay, to cover this, you're running a bad business. That's the system screaming at you that your percentages are. That's the business saying, no, you can't afford this, Ron. Right. If you have to work within the percentages. And so if the money isn't there, well, you got to go out and sell more. It's
That's
that
right.
simple. You can afford it.
So one of the kind of toughest decisions a lot of times for entrepreneurs is, well, one is like, how do I make payroll and I'm falling apart? That's never a good decision, but that's a whole different one. But you've got some money coming in and you have to choose between reinvesting in the business for future growth and taking
Yeah.
profit out today, right?
Yeah.
So how do you've kind of mentioned basically you have this profit pool and you're putting 50% in the company diversified into actual like third party investments to create investment income, right?
Yeah.
To give you those
Yeah.
pieces. Of course, that eventually balloons up. I'm assuming after a year or two, you go, all
You
right, we
did
got a
it.
lot in there. We take that stuff out.
Yeah.
How do you decide? Let's say that you've got a client and they're going, hey, I've got right now I'm feeling good. I got a 30% profit margin. I'm spending 30% on labor and I've got, whatever that left at 40% in my overhead and marketing and everything else.
Yeah.
I'm feeling good,
Yeah.
but I do have this a problem. I need to. I've realized that I'm underpaying my people, or I know that I'm going to need to increase our benefits expense, or um, I don't know. I've decided I want to invest more in marketing, whatever it is.
Yeah.
How do you? What's your kind of mental framework for instead of making 30%, make 25, right?
Yeah.
Like when do you make
So
that decision?
I think it depends on the season of the business that you're in and what you're trying to build, what you're trying to earn, who are you trying to service? Okay. So there's that, all of that takes into consideration what your starting percentages are. So a startup, just say for an example, that wants to reinvest everything. Okay. They have algorithms, they have methodologies, they have reasons. They believe they shouldn't be profitable. They'll pay themselves later. They'll get the market share. Well, that's all hogwash when it comes down to it. So under profit first, you could still stack the percentages where 90% of it are going into the OpEx account, right? It's a framework. This is a framework in a system, right? It doesn't, you should start paying yourself immediately. Otherwise, why are you doing this? You should show profit. It's going to create a greater EBITDA. You should, be allocating money for future endeavors. One of the things is to have a core capital account, right? If you're going to open up another franchise, if you're going to open up another location, right? Rather than going out and, getting loans and stuff like that. Yeah, which you can do, but you can also start allocating for future investment purposes, right? Mike and I have 25 bank accounts at 5 different institutions. Each one of those each one of those bank accounts is a specific purpose, right? And the reconciliation takes under 8 minutes. So everybody relax. They're all holding accounts.
Right.
Okay. This is how you architect the cash flow in the bank accounts to not only eliminate the pains, but achieve the wants, right? That's one of the things that we're looking for. So an owner like yourself, that's, profitable, doing well, paying themselves, seems to have it all. I'm going to ask some additional questions, right? What does your insurance look like? Are you well capitalized? Do you have 3 to 6 months of core capital? What about alternative stocks, bonds, mutual funds? Are you a decamillionaire that assets, 10 million in the bank of liquid assets ready to go at any point? Do you want to send your kid to private school? What about alternative cash flow? You want to buy a business, you want to buy this, you want to do this,
I love the
right?
juxtaposition of Deca Millionaire and private school, because they're both just seem about the same cost right there to me, same difficulty. It's like, yeah,
Well,
those line up. But
so what I'm
the-
sharing though is stuff that I didn't know about growing
right,
up. I
right,
thought everybody just got a job and was an employee and worked, right? And then the whole world of entrepreneurism, it's crazy. I didn't realize how many, of us were suffering, struggling, because they didn't have the right systems, right?
right,
And that's without the systems, you're not going to have clarity. So to have cash flow clarity means you understand the ebbs and flows. You know what's coming, you know what's going, right? And if you don't have that cash flow clarity, then you certainly need a system, right? You need a system to help you with that, as well as put guardrails in place so you don't start spending money like a drunken sailor when you get it, because that's usually what happens.
that's right,
Sell, sell, sell. Money comes on in. Oh, I got money. I'm paying this. I'm paying this. I'm paying this. I'm doing this. I'm doing that. Next minute, your P&L, your balance sheet says there's a profit, and you're like, where'd the money go? I don't
that's
see
right,
it.
that's right. I was brought into a client a while ago that was not that. He had 1.7 million in profit.
Nice.
Good little client. I'm very pleased to have him. 15, 20 employees. Very unusual industry. So if I name it, they'll know. So
Yeah.
I'm not going to name it. But 1.7 million in profit on 2.5 million in sales. Great,
Great.
rocking it out.
Yeah.
He brought us on because he was thinking I'm going to grow and expand, and then kind of his marketing channel just kind of collapsed. He started kind of going down, 2.5, 2, 1.5, 1.2, and really a lot of our work was managing the shrinking of the
Exactly.
business. Not fun
Yeah.
on the HR world, but um, he had nothing. He went bankrupt. Had nothing.
Oh,
I mean, he had to close it down and go bankrupt, despite pocketing well over 100,000 a month for years. He had nothing
that's a
saved personally, but also all this profit in his business he was using to reinvest in other businesses and do all this other stuff. And he was a very creative entrepreneurial guy, but didn't follow any sort of
no.
methodology to prepare himself. And it crashed.
I see it in the influencer community a lot. A lot of these YouTubers, a lot of
Yep.
these lifestyle folks, they don't realize that the money that they're earning, they have to pay taxes on that stuff. Um, I
Yep.
see it. Young professionals knock it out of the park. They'll go buy. I saw this the other day. An influencer, she's probably making 600, 800,000, a million, consistently for the last 3 years. Okay. She's young, right? So I was talking to her profit first professional, and she's struggling because, she's not putting that profit first accountant is struggling because it's hard to convince somebody that's doing well that this is going to continue forever. It's like a professional athlete. They
Yeah.
think that they're invincible. And so I'm like, okay, well, that's why the profit first is perfect for this. And so I said, okay, let's take a look at some of the spending habits. I saw a Lamborghini that they put down over $50,000 and then leased it,
Yeah.
right? Well, they have a $1.8 million apartment. They're
Wow.
blowing money left and right. And while those are somewhat justifications for the lifestyle of an influencer, they're not putting it away. They're not saving it for a rainy day. They're not they have no pains right now. So it's not architected in a way that, will alleviate pain should they ever come. Hopefully they'll never come. But if not, at least if they don't come and you still have profit first, you know how much money you have in these bank accounts?
That's right. That's right.
Yeah.
When I think about um, again, in my world, it's all about employee engagement. And I'm considering a client. I don't know exactly their gross revenue, but I think his profits around 4 million a year.
Right.
Average employee probably makes 80, maybe 100.
Okay.
Little less than that. Probably, yeah, probably 80.
Okay.
So that means they got people making, 50, 60, and they got a couple
Yeah.
people making 200, that kind of thing.
Yep.
Been in business a while. And I've actually talked with him a little bit about profit first as a methodology. We talk about it in terms of employee engagement. He wants to think about a profit sharing program, et cetera.
Yep.
And there are ways to optimize these strategies, which I'd like to talk to you a little bit about. But one of his key issues was he did not feel comfortable sharing what he made. He doesn't feel like it's
Right.
anybody's damn business that, and especially when you got a sole owner who's built the company on their back. They're like, look, I make $4 million a year. And this, by the way, if you're listening to this and you're like, that's not my problem, that's okay. Hopefully one day it will be, right? But if you're
Right.
making 4 million a year and your people are making 100K or 80K or 60K, is it a little like how do you address that discomfort of saying, well, I made $1 million this quarter. For you all, we will be sharing 35,000 or I got 85,000 bucks across you. Like, how are you gonna work that?
Well, it depends on what they want to do, right? Like, so here, profit first is a family first environment. I want my employees to my goal here. My goal as an owner is to help them and provide them with a vehicle where they can accomplish their life, right? Where they can, use the funds that I pay them, the freedom that we offer them to live the lifestyle that they always wanted. And at times, okay, yeah, maybe instead of me or Mike taking an extra 100 G's, and all right, we've decided early on to allocate that staff to culture, to various different things. So if he's at a point now where his lifestyle is way up here and he's feeling maybe guilty or he's looking to be philanthropic, okay, and start helping now, well then we need to set up a system or a mechanism where it keeps him where he is because he doesn't want to get resentful
Right.
because if he's been doing this for so long, giving this under here, okay, he might see it as resentful if people aren't going on up. So, what is the culture of the organizations I would look at? I would look to fortify the culture, right? Before I just started doing profit, giving money to everybody, because it may not be money that people want,
That's a really
right?
good point. I talk about this a lot. The number of organizations I go in that are blowing money on a platinum level, in-depth major medical plan that the New York Union would be jealous of getting in a 20-person shop. And I mean, uh,
Yeah.
and yet they have no ability to communicate that. So their employees think, yeah, we have okay insurance. The number of companies that I go in that have excellent leave policies, maternity policies, short-term disability to cover issues, long-term, all these things taking care of their employees for a long time and have no management of their performance. So that a lot of people there are well underperforming. Their top performers feel resentful because they do a lot more of the work and they're leaving. There's a lot of things that go into employee retention and attraction far beyond the paycheck. Let's
Yes.
make sure that's clear. But on the paycheck bits, there are a few things that I've been brought in on, and I kind of want to get your opinions on them. So,
Sure.
profit sharing in general. Um, we have enough time. I'm going to do two broad questions on here. One is we've looked at companies that do a quarterly profit distribution similar to you all, where it's literally a bonus on their check. Right, there's your money. A lot of companies talk with me about doing, and we've done this in many companies as well, an integration into a retirement plan and do
Yeah.
profit distribution that way so that primarily, well, there's a tax advantage there, of course, right?
Yep.
But they also then turn that into a vesting schedule of, say, 6 years, right?
Mhm.
So at the end of your first year, you qualify for the profit sharing. Now we're going to drop the profit sharing into your account every quarter or every year.
The benefit,
Um, and yeah, and it
right?
invests 20% a year, right? So they use it as this kind of long-term retention strategy. Why do you think more in the give them dang cash? Or what is it? What are kind of your considerations in that?
Yeah, so we actually do both,
Oh, there you
right?
go.
So
That's a good answer.
we have yeah, we have two profit sharing components. The first one that we explained is a quarterly cash distribution. And the annual one is basically what we're talking about, a defined benefit plan where an actuary actually tells Mike and I how much money we have to give into the 401k for the employees, whether they participated in it or not.
Right.
Okay. Yeah, so I love that for a couple of reasons. One, I believe in savings. Okay. So a lot of people need forced savings. So this is a little way how I can kind of force save them. Additionally, it allows Mike and I to invest more money in our own retirement safe harbor, right?
Absolutely.
And in addition to the 19 grand, I think Mike and I can put in an additional 38,000 if we're meeting our threshold of, it's an investment in the employees. It's like so little of a percentage that why would you not do this, right? And so yeah, we do. What I don't subscribe to is the year end profit distribution bonus check. Okay, people
Mm.
or it's fading. Everybody expects it, and they're minimized year after year after year. It almost becomes like a regular. All right, we get our profit, and people are counting on that as income. And we saw in the .com crash, we saw in the real estate crash that everybody who was living on their bonus, okay, to make ends meet, got walloped because it's a bonus, it's not salary. So again, the culture, this is based on the performance of the business. And I think it really comes down to how the organization is communicating what is, compensation, what is bonus, because the two are totally different. And under profit first, profit and bonuses are a reward for running a great company. Bonus doesn't come if you're not running a great company and you're not hitting expectations and milestones.
When you
So,
do your quarterly distribution, then,
mhm.
so you share obviously in
Good.
your
We didn't work.
organization. Yeah, you're
Yeah.
saying here are our financials, right? Do you do
No,
you say gross revenue, all of our expenses, and
we keep it
like
high.
keep it high level? Here's our net
Yeah.
profit, bro.
Yeah. Yeah. We keep it simple. No one ever asked to see the financials.
Hey, can I see? Yeah.
Yeah.
I mean, well,
Yeah.
and I will take a moment and put my compliance hat on for just a second. Um,
Yeah.
Employee contracts, promises of compensation, etc., are legal documents and they matter. If you are
Yeah.
going to create a written plan that obligates you to do these things, employees do have a right of inspection. There are a lot of pieces that go into this. So you need to make sure you're working with a good HR company, an attorney to craft these things. If you tell
Yeah.
someone at the end of the quarter you're going to get even distribution of our profit based on this formula, you
Yeah.
have to really be careful about what do you mean at the end of the quarter? Based on what? What happens if you leave between now and then? Am I still owing you this compensation? And if so, for how long? There are a lot of pieces that have to be written and clear. Otherwise, you will get screwed on this.
That's
So,
why I love working with you
yeah, a little
because
side note.
because I don't think about these things,
Yeah.
right? And that's why, we're working with a firm like yours because guys like me, you know, we're busy doing other things. And these are important details. And I'm not a details guy. And so if I can have the confidence that I know that somebody is architecting our payroll solutions, our HR benefits, or our comings and goings, and just tightening it and making sure everything is buttoned up, I can focus on growing the business. I can focus on growing staff. I can focus on this stuff because I don't have to, I'm not concerned about whether or not I'm in compliance. Right. I'm not concerned whether or not I have the right posters. I'm not concerned whether or not, this is getting done or this is somebody's getting favoritism over this or that. No, because what we work with a year and a half to put together these policies and procedures and systems and processes to fortify, our organization and also to the beauty of what you've created with us. It hasn't hampered our vision,
Right.
right? It hasn't hampered our willingness to give, right? We're very giving. And so, one of the things that I was concerned about is, hey, I can be a bro every now and then, and I don't want to lose that.
That's right.
Right.
There's a
It-
policy of this, and if you need to give more time off
yeah.
because this is your then we wanna make sure you can do that. Every company is different, um, and there is you know, what I think about a lot in our business, everything we do comes in 2 broad flavors: risk mitigation and return on labor. A lot of what we've been
Right.
talking about today has been return on labor. It's spending your money correctly, organizing it so that you, the business owner, are well compensated for what you do, and designing programs so that your employees work harder and longer and don't quit and want to come work for you. All those things are return on labor. The
Yeah.
risk mitigation side is a big part of what we do because
This is a very
everything, yeah,
one of the parts of what you can do.
yeah. I mean, it's a big part because everything
And
you do in business generates a
McCallowitz,
lot of questions. What was
yeah,
that?
well, McCallowitz just came out of the podcast room and whipped this at me. It's a cake crumb,
It's a cake
right?
hunt. Yeah,
Yeah,
yeah.
yeah. You
That's
know,
assault.
I
That's assault.
know.
As an HR guy, I say turn it and throw it right back at him. That's the key. You can't discriminate, right? Slap that anyway. All right. There's a reason we get along, Ron. It's we can't show them on the podcast what we really do.
Yeah,
But yeah, it's a good business and I love being able to work with different organizations. If you're that actually takes me to my last core question that I pre-wrote on this. A lot of my clients are nonprofits.
yeah,
I'm going to leave the government side out of this because that's just too complicated. But
yep.
I've been called out. I was wearing a Profit First shirt from your conference, and I was on a meeting with a a nonprofit, and they were like, "What is that?" And I'm like, "Oh, well, let me walk you through this idea." Have you
Yeah.
ever worked with a nonprofit? Have you ever thought about incorporating Profit First into a nonprofit? And if so, what are your thoughts? I'm just total off the wall question on that.
Yeah, absolutely. I've been working with various nonprofits, churches, ministries, mega churches, local churches, all sorts of stuff. These are businesses, guys, right? They're a business and their business is a charity. And so one of the things is I made the mistake 100 years ago, calling profit first to a local church, a local nonprofit. They said the same thing. I'm like, oh, okay. So you're hung up on the word. All right. How about this? We call it purpose first.
That's
Oh,
a
I
big
love
shirt.
it.
Oh yeah. Oh yeah. Now I'm in. Yeah, I'm there.
What I did was change the word from profit first to purpose first. And they're like, purpose first? What is that? Well, instead of owner's pay, you have executive draw. Instead of tax, you have grants. Instead of this, you have that. But see, that's the beauty of profit first. It's a system. It's a system. Doesn't matter what type of entity you're doing, what type of money you're operating with, whether that is profitable, nonprofit, whatever. These are businesses that need to be well run. And here's the thing, right? A church should have a capital repair account. The steeple, the famous Putin steeple, needs a painting. Why don't they paint it? We don't have the money. What do you mean? Why don't you have a core capital repair account to keep this place looking good? What happens when donations went down during the COVID? What happens when, savings and the inflation, right? That money that went to charity is going to groceries now. So these missions, these visions, these non-purpose still need to continue. Okay. If you don't have the right systems and processes in place to continue your mission, how are you going to continue to give? Right. And so forget about what the name of the system is. Okay. Look at what it's doing. Look at the value and the benefits. And if you are hung up on the name of it, get the word profit out and replace it with purpose. Every time you read that book, take out purpose.
There you
I
go.
mean, profit, put in purpose.
That's
And it
exactly
makes
right.
all the sense in the world.
I worked with a nonprofit, and they were setting up a profit sharing. It's a 401k. It's a 403b for them technically, but it's a thing. And they
Yeah.
wanted to set up an incentivization for the organization to run efficiently and accomplish its mission. Um,
It's a
but
perfect for
yeah,
a nonprofit because look at the executive turnover. Look at how many directors are turning over year after year after year. Within a 5-year period, I guarantee 2 to 3 heads have turned over.
it's
This
stuck.
is the foundation. And so you have people coming on in with new directors coming on in with their own vision, own ideas, and they're screwing things up. not unintentionally, but they have their own vision. And what's happening is they don't have a core cash flow system that keeps the mission alive.
That's right.
Oh,
And the number of boards that I've worked with that are unwilling in good sized nonprofits, 5, 10, $50 million nonprofits, to provide any sort of incentivization to their executives, right? That or even their staff, right? It's like we don't do that here. And it creates a misalignment. And so I think
yeah,
this idea of a purpose first account where we make sure we do tie these incentives together is very reasonable. I was and not going to screw up your grant funding, guys. It's not wrong
yeah,
to say we allocate a certain percentage of our gross revenue to to create alignment and incentives between our staff, our executives, and our mission.
yeah.
Um,
I've worked at several nonprofits, and they all want to be helpful. They all want to give, 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 give. Right, and they're losing volunteers. People aren't signing on up because of various different reasons. And so, having a charitable plan in place, if it's somebody's birthday,
yeah,
right?
yeah,
Like, why? You know what? That means the employees, or not the employees, the other volunteers are usually going and get back out of their own pocket,
right.
right? And so, if do I want to work for a nonprofit that a lot of the good is coming out of the volunteers' pockets to support the culture of the nonprofit? It's like
Absolutely not. Yeah.
it's like working for a bad company.
That's right. Well, and I will tell you, a lot of just like a lot of for-profit companies, a lot of nonprofits are bad companies. That's one thing I mean, I don't know if you know this, Ron, around 70% of my clients are nonprofit. We
Wow.
actually, we love profit first, of course, here. But
Yep.
nonprofits are my bread and butter. And one reason is that they realize that that the answer can't just be pay people more a lot of times, right?
It's
So
not pay
making
people.
sure things are structured, systematic to attract and retain good talent is it's what we do, and it's a big deal. Also because they have boards, they're more risk averse, and the board members don't want to get involved in something that's going to wind up having a major compliance risk. So we work with a lot of nonprofits. But executive compensation is one of those things that I can just never get people to come around on in a lot of ways because it is the most consistent issue I see. Um, and I will just say that I think the idea of introducing purpose
Yeah.
first to them is a really, really fun idea.
Let's do a webinar
I think we
specifically.
might have to do that. Yeah.
Yeah, I would love to share the purpose first story and how it can benefit, everybody, every organization, everyone of you listening to me, regardless of where you are in your business. You can apply profit first, but be careful. Start small. Start with little percentages. It might just be opening one bank account, allocate, a little bit money in there, see how it goes. Then as things are going well, allocate a little bit more into it. Just like the 401k, right? When the 401k first came out, I didn't do, 15% right off my top line
Right.
salary. Nobody did. So you started off with 3, 5, 10, and then eventually you're like, huh, I'm living the same lifestyle with 15% of my top line salary being taken off and put into a bank account.
That's
That
exactly
worked.
right.
Right? It's the
Right.
number one living vehicle in America. That's profit first.
That's right. Systems, the genius of systems in HR, in employment, in marketing, in sales, and in finance is that they can be iterated and improved upon. If you
Yeah.
have no structure in your finance, right? You are you may have a good month, you may have a good quarter, you may have a good year, but you have no structure, which means you're not getting better at it. Profit first to me is the financial system that gives you all the pieces. You're going to move things around. You're going to adjust the numbers. You're going to adjust the number of accounts and the things you're saving for based on your life. But the structure, the system, the process is what gives you the ability to iterate. And iteration is the core of your business. It is what makes you better and better over time. If it's a piece of your business that's neglected, and you want to learn more about Profit First, down in the description, there'll be a link to a simple form to fill out. Just need your company name, phone, and an address, and we'll be happy to mail the first 10 people, US based businesses
Yes,
or
you're
nonprofits,
good.
US
Thank you.
based
Yes.
nonprofits or businesses, first 10, we will be happy to mail you a copy of his book. And if you're not one of the first 10, that's totally fine. I'll be happy to send you a recap of some of the key information from Profit First that Ron's got us in the past, and direct you where to find out more information.
We're
Ron,
also put a link in there, Rami, if anybody here who's accountants or bookkeepers are not on board with this, I'd be more than happy to help you upgrade your current accounting and bookkeeping staff.
I think that's exactly right. I'll tell you this, I have a lot of Profit First accountants that refer me, and then I have a lot of business attorneys and more traditional CPAs and kind of larger structured firms who roll their eyes at this. I love you both. But this system is accountants, you guys have your own way of doing things, and there's nothing wrong with it. It's the right way, it's the gap, it's the accepted accounting principles. But as a business owner, what would you give for the business owner clients that you work with to follow the same thing
Yeah.
every month? Forget if it's good or not, just to follow a system. That alone is a reason enough to introduce Profit First to them,
So Rosetta
and to
Stone.
become an expert on it. But beyond even that, it will increase the longevity of your clients. If you're working with tons of clients and you see attrition, failure rates, 10, 15, 20%, that's telling you the clients you're working with, one of the primary issues could be that they don't have a financial system that's saving for a rainy day. It's going to help
Yep.
them with these pieces. And you can provide a lot of value beyond filing their tax returns and doing their books by introducing them to a system like Profit First. So I highly recommend you reach out to Ron on that. We'll include a link in the description as well for that.
Awesome.
All right, Ron, thank you so much for your time today. It was great to chat with you. Can't wait to see you very
Yeah,
soon. We're always happy to work together.
my pleasure. And may the profits be with all of you.
Thank you, sir. Bye bye.
Bye.